Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And before I begin, I just want to say a very big thank you to all my subscribers for being my subscribers. It means a lot to me, especially some of the comments that I get at the end of each video. So thank you very much indeed for your kind appreciation. You have no idea how much it means to me to know that my technical analysis is being appreciated and valued by so many people out there. So a very big thank you to you. And in today's video, I'm going to be looking at a bit more of the micro analysis of exactly what's happening with Bitcoin over here. But I'm also going to be covering one of the Bitcoin miners, which I have a lot of interest in, and that's going to be Marathon Digital Holdings. And before I begin, just the normal usual disclaimer, please remember all my videos are for educational purposes only. Nothing should be taken as financial advice. Always do your wider research before making any big investment decisions. So with that out of the way, let's get cracking. A quick reference to my Twitter page. I've just posted a few quotes here which mean a lot to me. Certainly this one here: work hard on your job and you will make a living, but if you work hard on yourself and you will make a fortune. Always remember, 90% of billionaires started with nothing, and they are the 1% who are willing to do what the 99% are not. So please set your life sat-nav to that 1%, and anybody can do it. If you look at the background of all the billionaires in this world, they are not anything better than you. They've just got a different mindset. And always remember the famous phrase, success leaves tracks. And if you follow the tracks of successful people, guess where that's going to lead you? Yes, to success. And if you want to go to my Twitter page, if you look below any of my videos, you'll find the Twitter link there. Okay, on to today's analysis. When you look at the Bitcoin chart, it really makes no sense looking at it the way it is here. However, as soon as you put a few lines, what you do is you create a template that guides you in a certain direction, in a certain way of thinking of what's happening with the price. It gives you some historical perspective. It gives you some sort of a direction. And with a few little technical analysis techniques, it can make you very, very profitable. So in the last many videos now, I've explained to you exactly all this channel here and the direction of the price, the fall that we've had here, the types of patterns we're developing here. So today I'm just going to go through quick micro analysis of what's happening around here in the current price. Okay, so let's start to build the chart again. These two lines are the two key support and resistance that I've been going through for the many, many videos now. This is our $46,000 mark, which we're expecting that once we break above that, then the price for Bitcoin is more than likely, with a very high degree of probability, going to go to the upside. And this is our support line at the 40,000 level. This has been our critical level for the last 12 months. And the current price is stuck between the two, trying to make up its decision to whether to go to test that 46 before breaking up or to test the 40 before breaking down. And I mentioned in many of my previous videos, when we were doing the analysis of each of these candles and the meanings of each of these candles in the way they were forming, I said that with a high degree of probability that the bottom is in for Bitcoin over here. Because of the rising demand that we were seeing here in this trend line, which is now providing very good support for the price along this trend line here. Yes, we had a bit of a fake out here, but that's what Bitcoin does. It's a naughty boy permanently on a naughty chair, and we just have to work around him. So we've got this trend line, which we're still finding support even now. So don't get spooked out by the market. As long as you can draw a few lines, that'll give you the reassurance of exactly what's happening with the price. We haven't completed it yet, as you can see. We're just about completing it. And when we get to this point here, Bitcoin has a decision to make whether to break to the upside or get rejected back down to the downside. And I mentioned this Hikake pattern over the last 2 or 3 videos now here, that this is what was developing here. And we've had that breakout. And what we've done is to create this lower high from the peak that we reached just recently on the 10th of February. So now we've created this channel here, a symmetrical triangle, and the price is now coiling very nicely in this triangle. And now we're going to go up to this trend line and then break up, or then come back down and retest this green line here. And if we break that, then the 40,000 is back on again here. And yesterday and the day before, I drew this Fibonacci retracement level here, and I said that it may well be that we've gone up here and we're going to have a Fibonacci 61.8 retracement back to this level here. which was around about 42.6, 42.7. And if you haven't watched those videos yesterday, you'll find how the price action has been developing and how we've got to where we've got to today. If we zoom in a little bit more, you can see that we came down to around about 42,900. So we just got supported above this Fibonacci retracement. And as we know, Bitcoin has a very high affinity towards the Fibonacci retracement level of 61.8. So I would expect, with a high degree of probability, that either today or tomorrow, we're going to come and test this level here, 42.6, 42.7 level, before we either go back to the diagonal trend line here, or we're going to get rejected back down to the green support line here at around about the 42,200 level. And my perspective is that if we hold the 61.8 level here at 42.6, 42.7, then I suspect that with a high degree of probability, we're going to go and test the 46 rather than to come and test the $40,000 mark here. It's absolutely intriguing what's going on here. If we hold this level here, I might just also dollar cost average in my long-term portfolio and might even take a swing trade here if I'm a bit naughty, with a stop loss of around about 41,500, which is the bottom of this wick here. The main reason for that would be the head and shoulders pattern that's developing over here has a high degree of probability, between 70 to 80%, to break to the upside. And if we hold the 61.8 Fibonacci level here, that just increases the likelihood and gives us that bit more confirmation, more confluence, that we're more likely to then go towards the $46,000 mark, and reduces the chances to go lower. So we'll just have to wait and see. Let's see what happens. Looking at the moving averages, this is the 50 simple moving average on the daily chart. It's quite clear that the bulls are now in charge here. Once we broke here down below this 50 moving average, the bears took control, and this is what damage they did here. The bulls are now repairing that damage by going above that 50 simple moving average. The exponential moving averages confirm exactly what the 50 simple moving average says, and that is that we've moved above the 21 here, and the 34, the white line, and the 8 EMA. So all three are now showing bullish signs, and the bearish trend has now weakened quite substantially from down here. And what we've got to be mindful is that if we lose these three EMAs and the price falls below the lowest one here, which is the 21 exponential moving average, and that's at 42,000, if we lose that, the bears will take charge and will push the price much lower. And then we need to see if we can create a higher low around here, which will still keep the bullish trend in check. So until this support line here, the support trend line here, until that breaks, then the sun is definitely shining on the $46,000 mark. And that's where the new battle will begin between the bulls and the bears. And whoever has the greater ammunition at that point will win the race, and we'll cover that in the future. It's an intriguing battle that's been going on. Okay, on to the Bitcoin miners, and the one I want to cover today is Marathon Digital Holdings. This is one of the bigger Bitcoin miners, and I've covered this many times before. And the first time I covered this was, I think, around about the first or second week of January in 2021, when the price was around about the $6, $7 mark here. And many of you bought in at this time, so I hope that you're showing a big profit over here now. The reason why I want to cover this is because the Bitcoin miners are a leverage play on the Bitcoin price. And if you look at the chart for any of the Bitcoin miners, generally speaking, on the whole, you will get the same pattern as Bitcoin. Because their price is dictated by the Bitcoin price. But because they're mining Bitcoins at a low price, anywhere between $3,000 to $9,000 per Bitcoin, so that's their cost. And as the price of Bitcoin rises, obviously the exponential value of a lower cost priced Bitcoin mined is going to have a much greater effect on the profitability. And hence it becomes a leverage play on the rising price of Bitcoin. So when Bitcoin goes up by 100%, the Bitcoin miners go up by 300 or 400%. As you can see from this chart with a Marathon, Bitcoin broke out around about October 2020. And here, from that point onwards, Marathon Digital Holdings, to its height, went up by 2,400%. This was the first peak where Bitcoin reached 64,000. And if you measured Bitcoin from the same point around October 2020 to that same point at 64,000, Bitcoin went up by 500%. So that tells you that the Bitcoin miners are a leverage play on the Bitcoin price. And just like Bitcoin's forming this W pattern here, which we've been talking about, look what's happening with Marathon. It's forming its W pattern with a double bottom here. So both are ready and primed to take off in the upward direction. The reason why I want to cover Marathon is if you look at the fall from here, just like it's a leverage play to the upside, it's also a leverage play to the downside. And if you measure the fall from its recent peak from November when Bitcoin hit 69,000, well, Marathon hit $83. If you take the price from there down to the low it's just been to, it fell by 76%, while Bitcoin came down 50%. So when the Bitcoin miners fall, they fall very hard as well. And that's why these are not for the faint-hearted. And please remember, this is not financial advice. I'm not encouraging anybody to buy these. I'm just giving you another perspective of something different, what's happening in the background of Bitcoin. So to recover back to the same position of $83 from its low that we had here at 19.5 recently on the 24th of January, we're looking at an increase in the price by 329%. Whereas with Bitcoin, if you went from the low at 32,900 back to the 69,000, you're looking at 108% rise. So the Bitcoin miners on the upside present a far better potential growth than Bitcoin does. And hence, the majority of my holdings are in the Bitcoin miners. And when I do swing trading, I do the swing trading on Marathon Digital Holdings, because when Bitcoin goes from 40,000 to 46,000, that percentage increase is about 38%. But when Marathon Digital Holdings goes up to that point, it's 63%. So currently, as we can see, just like Bitcoin's bottomed out at 32,900, Marathon has bottomed out at the $19.5 mark here. And just like the $46,000 mark is a key level for Bitcoin, you can see quite clearly on the chart here, if you look at the support level here, the resistance point here, and where we just came back to, you can see that once we break this level here at around about the $31 mark, then Marathon will also take off to go towards its all-time high of $83 here. And if you like this kind of analysis on the Bitcoin miners, then please let me know through clicking the like button and leaving some comments in the comment section that you'd want more of that, and then I can cover more of the other miners, because there's some incredible companies that have just come on the market. The couple of ones that I want to mention are Core Scientific and Cypher. And please remember, this is not financial advice. I'm just giving you my perspective of the wider cryptocurrency market. Everybody has to do their own research and find out whether those are investments that are good for you. So please let me know in the comment section. So we'll leave it there for the time being. I hope you found value in the technical analysis, and if you did, then please remember to like and subscribe and to turn on the notification bell. And if you want to leave any other comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.